So we think that you may end up seeing Bitcoin by the end of the cycle as high as $10 million per Bitcoin.
This is the greatest explanation on why crypto is a generational buy of a lifetime. And much like gold in the 70s, the stock market in the 80s, and Bitcoin today.
Gold was $40 when we went off the gold standard in 1971. That was the first time individuals could buy gold. And when the silent generation cohort peaked, gold was $600, a 15x in a decade, just by single generation buying gold. Boomers, we know, bought equities. That was essentially the stock market boom. If millennials put 10% of their savings flow, 100 billion, into crypto.
Watch this whole video, it gets better. And if you have one friend that you want to see become rich, send him or her this, they will owe you.
So it's been nearly 50 years since RV sales have been this strong. 44% of the buyers of the RVs today are millennials. Well, what are millennials going to be doing in the next 30 years? Okay, something you can see a mile away. I have a population tree here, and I've lined up each of the generations. The millennials are now just entering two critical periods, the home buying years and their investing years. So let's think about housing. I've lined up each generation when they were aged 21 to 35, and I colored each. The red is silent, the boomers are light blue, Gen X is gray, and the millennials are blue, dark blue. Housing starts have peaked with every generation's peak cohort size. This tells us housing is going to likely boom through 2030. So stay long housing, I guess, right? It's really bullish. But let's talk about investment years. Savings flow, okay, so the investment pool of prime income age earners is running about $1 trillion a year today, okay? So every year there's $1 trillion that the people aged 35 to 60 allocate, and today it's dominated by boomers and Gen X. But the millennials are now just entering these prime income years. So what did the silent generation do when they dominated the prime savings flow? They actually bought gold. Gold was $40 when we went off the gold standard in 1971. That was the first time individuals could buy gold. And when the silent generation cohort peaked, gold was $600, a 15x in a decade, just by single generation buying gold. The boomers, we know, bought equities. What was the first year the boomers turned age 35? 1982. That shaded blue area is their first boomers to the peak size of the cohort, 1982 to 99. Coincidence? That was essentially the stock market boom. And the question is, well, what about the Gen X, which was a smaller cohort? As you can see in the middle period, the stock market didn't go anywhere. Gen X wasn't big enough to actually power the stock market higher. But here we think the millennials are going to drive equities. They like growth stocks, so we think it's going to power a stock market boom through 2038. Gen X liked hedge funds, and you can see that's essentially peaked with Gen X. But here's what I think millennials are going to do. Now remember, millennials are going to soon have $1 trillion of savings flow. Bitcoin's rise in 2016 coincides with the first millennials entering their prime savings years. Today, crypto, for every $1 billion that goes into crypto, it's turning into roughly $25 billion of price appreciation. If millennials put 10% of their savings flow, 100 billion, into crypto, that's a $2.5 trillion rise per year. And crypto is roughly a $500 trillion market cap. So we think that you may end up seeing Bitcoin by the end of the cycle as high as $10 million per Bitcoin.
And this is where things get good. This is managing partner at Fundstrat Global, Tom Lee, just FYI. And just understand that this talk is actually about half a decade old. Took place, I think, around 2018, 2019. Bitcoin has been performing to the T exactly as predicted. But let's understand what's next. And by the way, only with promo code Altcoin Daily for a limited time, Get up to $30,000 in a deposit bonus by signing up with the link below. Trade, buy, and sell crypto with partner of the channel Bybit, link down below, and watch how this ends.
Okay, so I'm going to just walk you through why crypto is an asset class. First of all, the St. Louis Fed actually published a white paper, and they said it looks like it is quite a viable asset class. And you might say, well, isn't crypto breaking all the rules that we know about? I went to Wharton. We had like the 10 commandments or evaluation, etc. But I think over the last 20 years, a lot of rules have evolved. It used to be that 92% of companies that went public had to make money. Today, only 20% do. We've already broken that rule. Private equity used to only be 1/3 of the public market. Private equity now is 84% of the public market. It may possibly be that in a few years, private equity is bigger than the public market. Bonds used to pay income. 80% of bonds in Germany have a negative interest rate. So I think rules have already evolved. And just to give you some perspective, in the S&P today, 77% of the value of the S&P is intangible. It is not, if you liquidated the S&P today, you'd only get 20 cents on the dollar. The value of most major brands today is built on trust. So here's where we come to store value. People think gold is the only store value out there. We've published a piece earlier this month that really looked at what's the true store value. People use store value. Gold is one generation store value, but it's including collectible art, real estate, negative interest rate government bonds, and collectibles. That's a $280 trillion market is used today to basically park money, excluding financial assets. Bitcoin's $200 billion. If Bitcoin ends up just being 1% of the store value in the future, it's $150,000 per coin. So again, from a mile away, I can see this value transfer towards Bitcoin and cryptocurrencies. So now let me jump to why Wall Street is going to care. So there's 3 reasons Wall Street's going to care. The first is there's a lot of money being made in the crypto space. The biggest exchange for trading financial assets today is ICE, Intercontinental Exchange. They own the NYSE, NASDAQ, and they're global. Thousands and thousands of securities traded. They made $1.6 billion last year. We estimate Coinbase could make $600 million this year. It's a cryptocurrency exchange. Only has 4 currencies on it, and it's about 3% of global trading. In 18 months, Coinbase may be more profitable than ICE. And that is just mind-blowing. I don't think anyone could believe that ICE, the biggest exchange in America, could make less money than Coinbase. And that may be the future. So one, there's a lot of money to be made. And Goldman, Morgan Stanley, even ICE understand this, and I think they're building infrastructure into gateways into crypto. The second is that the crypto market is already large. It's $500 billion today. It would rank as the 20th largest country. So again, if you think about the emerging markets analogy, crypto is already the same size as Brazil, Spain, Singapore, Russia. It's bigger than Ireland, Spain, Israel, Greece, Turkey, Vietnam. Wall Street has thousands and thousands of bankers and research traders, everybody, hedge funds dedicated to these other countries. This is going to start to focus on crypto. And the third reason is that as a portfolio strategy, crypto is uncorrelated alpha. Now, what does that mean? Take a look at this. If you look at each of those lines at the top, that represents the correlation of Bitcoin to stocks, which is blue, to bonds, which are red, gold, which is gold, and hedge funds, which is light blue. Bitcoin and crypto are uncorrelated to other markets right now. It is uncorrelated. That is almost a holy grail for portfolio allocation.